Hey, good morning, everybody. How's it going, guys? You ready to get another week started here? Yeah, last week was a little crazy, wasn't it? But like I said, it's 2019 is going to be our year. This is going to be the year that changes, that's going to change our lives. But the thing is, we've got all year to make it happen. We can't come in and try to make it happen in the first week or two, or the first couple of months. We've got to use this whole year, all of this time that we have, in order to make it happen. All right, Northern Ireland. How's the weather over there? Oh no. Well, we've had Seattle weather for the last couple of weeks with that rain and just wouldn't stop, but finally it broke. We've got some pretty good weather over here. All right, guys, so welcome back to our weekly market strategy / swing trade watch list session. But today we're going to do things a little different toward the end. Streaming live on YouTube as well, because right after this session, I'm going to be sharing you the my roadmap for that Grow Your Dough challenge that I decided to join last week. Now, if you saw the video from Friday, you know exactly what I'm talking about. But I feel this challenge is gonna be great. It's gonna show everyday working people the benefit of taking charge of your own money, and making it work for you. If anything, it's gonna make people aware of all of the options that really exist for them out there. So that's why I really wanted to be a part of this. Plus I want to see just how well the strategies that we use here, really work if you have reduced um, capital, if you're not able to use margin and all that. But we'll talk about that a little bit more as we get to that point. Well, we're gonna go ahead and get started and do our weekly thing, and then as soon as we get done, I'll share with you my roadmap, the strategies that I'm going to be using, so you can get an idea of the mindset that I'm going to attack this with. So last week was pretty interesting. We started out the week taking a hit, and we kind of pushed up a little bit. We took another little hit, and then on Friday we kind of recovered, and we got some good information Friday. So we ended the week. Now we monitor the S&P, 500. We're watching the ETFs, the SPY, and that's kind of how we gauge how the market is doing for us in terms of what we trade. So over the past week, we only gained 1.9%, but it's pretty good considering. See if we can get a bigger picture of this. Yeah, considering how we were starting out, because we had Monday was kind of a crazy day. Tuesday we kind of bounced around a little bit. Wednesday we sold off, and it looked like we were coming in. And you guys know from last week what my thought process was, and what I was looking for this to do is to run up and hit the 20 here, and possibly the 90. They were running kind of close together, but hit the 20 and then start to pull back. Well, we ran into a wall here at 250, And that might have had something to do with Apple and what it was putting out. But we started to turn a little bit sooner than I anticipated. But Friday, with, we had U.S. and China putting out some hard target dates for talks, to end the trade war, which I still think is going to take a considerable amount of time to work out. Now, the only way that would get done quickly is if this administration continues to reel from everything that's going on right now with the government shutdown and all of that, and they need a quick victory. Then they may make some concessions to allow this trade war to end quickly and, get them back on track. So that is a potential. I still believe it's going to take a little while, but, that's something that we could look for. Also, the Fed surprised me a little bit on Friday. And, like I said, Friday, my thesis was just blown up, especially when the Fed came out and pretty much said, hey, we're going to slow things down. Okay, I think they felt that if they continued to raise rates too fast, it would hurt consumer spending, and that's the strength of our economy right now. So, that was kind of threw a wrench in it as well. Plus, we had good jobs reports. Wages are continuing to go up. So, even though we had this huge sell-off here, going in the month of December, it looks like this year is kind of off to a pretty halfway decent start. But we'll see. Tomorrow we're gonna see exactly where we open up. Are we gonna be able to push through this resistance and continue to make the march up? If we do, I think 260 is the next level that we're probably gonna keep an eye on. Excuse me. I'm thinking around here would be the next level that we may see a slight pullback and maybe a pullback to the moving averages before it continues to go up. But everything, I've got a plan if it rejects here. I've got a plan if it continues to push up. Obviously, if it rejects, it's going to be business as usual for us. I make more money when the market's going down than it goes up, because I really like short selling on the day trading side. But if it breaks it, I'm going to be very conservative on the day trading side and more aggressive on the swing trading side. Because when the market's bouncing, it's good for swings. That's when I'm more aggressive with the swing trading. So that's what I'm looking for, for this week. It's, we see the MACD and the signal line is crossing again. We're, pushing to the upside. There is a lot of potential long if we get through this. But tomorrow, I think, is going to give us a really good indication of what we're going to be doing next week. Unless something major comes out. But you never know with the shutdown and what's going on behind the scenes. So, going to have a plan. That's why I have a plan either way. So, let's take a look at our screener here. Let's see what kind of watch list we can build. And then we'll take a look at what I'm going to be doing for the challenge here. So let's see if we got any oversold. Oh, it's okay. CAG. That's looking pretty decent. Looks like it's trying to lift up off. This is exactly the pattern that we're looking for. The huge sell-off here. The huge sell-off. And then we're just kind of grinding here. I think this had the sell-off dealing with earnings. And now we're kind of grinding back up. Maybe you can see it better on this chart. We kind of traded sideways here. You know, here we were in phase 4, the 4th phase of the market here. Now we're kind of putting in phase 1. And now we just lifted out of it, or attempted to lift out of it on Friday. It's got to get through this deal here. Push it down here. So it's got to close above this level. Right here we kind of peaked above it on Friday. But tomorrow, if we open above this line, we should see a nice clean move back up to the 20 here, or potentially the 90. But this one is good. This one we will put on our watch list. You know, through all of the turmoil in the market, this one kind of stayed steady. It didn't push up, it didn't push down. But definitely worth keeping an eye on. Well, Mitch, it being downgraded that's just more fuel for the fire. You know, in this strategy, what we're looking for, and we're going to talk a little bit more about this strategy when I get into what I'm doing for the challenge, because this is one of the key patterns that we're going to be using. But we're looking for it to sell off and overreact to all of the negative information. Okay, so it was downgraded, but it's been holding steady once we hit bottom here. So we may have found some support, and we could be building off this support. So that's what we're looking at. That's the premise behind this stock. I don't know that. I didn't look to see if it was downgraded. I just said if Mitch said it was downgraded. So I didn't see it. This thing really kind of lost it on earnings. And if it was downgraded after that just added more fuel to the fire. But it had its earnings on December 20th. And that's kind of when we lost it here. And we're looking for these stocks that just, overreaction, get grossly oversold. And, we kind of look to play that bounce. And it's funny. But whatever the reason, it's been consolidating. And that's usually a sign of strength. Okay, this one, now, obviously, the best ones are the ones that stretch the rubber band out really tight and then snap back. But this one kind of consolidated, and I could understand with the way the market was this week. I can understand this consolidation, but I think it's ready to bounce back. It's building up that potential energy, and it has the potential to bounce back. Not to say it will. I mean, it may roll over. We may get up tomorrow and the market's rolling over, and this may be coming back. That's why we have, our triggers. while we wait for it to trigger an entry. So we will put CAG on our watch list here for next week. Let's go back. It's the only one on oversold. 52-week high. Nothing on our 52-week high, which I wouldn't think. The market has been down so much. I wouldn't think we would find any right there. So 20 EMA crossover. This would be the one where we would find the most activity, especially after a week like this week. But we do have 46 hits on this scan. Most of them are still in a downgrade, a downtrend. So that eliminates these from our watch list right off the bat. Any stock that's in a downtrend, I don't want to look at. So, here's one that's fighting back. We're not in the downtrend anymore. AYX. And this one had a really strong push right into this descending resistance here. So for us, I guess if we had gotten into this Friday, make this clear. If we had gotten into this Friday over the 20, this was a good 2.5 points move. But as you saw, we're running into this descending resistance here. We're running into that. So if we push over this, let's say, it triggers our entry because it opens higher than it closed on Friday, and we're opening over this resistance. This can become support, and we'll look for a move to push the 52-week high, which is right here. So you can see this will be a good solid 4-point move up to the 52-week high. Now we know oftentimes what's happening lately is why we get so many false breakouts is that big money knows that relatively inexperienced independent traders, a lot of rooms, a lot of communities are still preaching breakouts. And so they'll buy it up to the breakout point, and then once the smaller independent traders come in and buy the breakout, big money's selling. They're selling into that breakout. And that's what we do. We want to be on the side of big money. We don't want to be the ones buying when it breaks out. Now, if this is going to be a real breakout, it will pull back with every, big money taking profit. But within 3 to 5 days, if this is going to be a real breakout, it will turn around and come back. And that's when we'll buy it when it breaks back out the second time. You never want to buy the first breakout. So with me, I'm going to keep on, I'm going to trade it to this level. This is going to be a target. And I will leave a little bit on to see if it continues or not. Because sometimes it will break out 2 or 3 points above and then pull back the same day. So I'll leave some on to see if we can get some more a little bit higher. But when it pulls back, I'll be ready to strike again. Either adding to the position I still have, or if I'm already out, then I'll buy the second breakout. Because by then, big money has made their money. They're done with this stock. Now it's just going to do what it's going to do. So that's the mentality behind this. So we'll put this on our 20 EMA crosswatch. Oh, let me type these out for you guys in chat. We've got AYX. No, so for the oversold watch, we've got CAG. All right, so now we're working on the 20 EMA watch. The 20 EMA cross watch is what we're looking at now. The first one is AYX. All right, so let's go back to our big scanner here. So again, we're only looking for stocks that are putting in, that's trending up. EXAS got some more work to do. It has a little bit more work to do. I think this has a little bit more work to do. Next week, it should be about right. GBT has a little bit more work to do. A lot of these are coming off the bottom because of the big sell-offs that we've been having. This one seems to have a lot of traffic above. You know, here's a short-term downtrend here. This one's gonna have to work itself out of that. So not quite ready to go yet. Not quite ready to go yet. So, oh, here's a good, I just happened to see this. This is a perfect example of the oversold hook pattern. Here we had a big strong sell-off. Let's see. This one doesn't report earnings. Not sure what caused it. Might have been a reaction to something else in the market, but we had a nice sell-off, and we sold off. Didn't really get to the 20 EMA. This one broke the 30, but not the 20 here. It broke the 30, but this is the pattern that we look for. The hard sell-off, and then we find the bottom. And then this is pretty much what the what CAG did. You know, we sold off hard. We kind of traded sideways for a minute, consolidating, and then we came up with the strong breakout. So this is exactly what we're looking for CAG to do. Looking for it to do the exact same thing. Depends on the market, Mitch. That's going to determine what patterns we see the most. Depends on the market. All right. So let's check the last. All right, our buddy TWLO. Here's the one that we traded a couple weeks ago before we had the big sell-off. You know, here we traded this we traded this 20 EMA cross, took profit up here at the 52-week high at that time, and it did just what we said it did. It popped up a little bit. People started buying it that day on the breakout. Big money dumped their shares. Okay, but we're still in an uptrend. Look at look at look at this. We're still in an uptrend. So I'm going to be looking to jump on this tomorrow if it triggers for another move back up to, this is right now, this is the 52-week high now. Now we're outside of that 5-day window, so this wouldn't be a clean 52-week high break. It would have to pull back, to give me another entry on that. But for the 20 EMA crossover, this is perfect. This is perfect. So we'll be putting that one on watch. We don't have any, a whole lot of traffic or anything to deal with. This level here, I think, is relatively dead. What I would be looking for is it to come up and tap this ascending resistance here, just over $100. So that one looks pretty good. Which really, I would say it'll be my main watch right now. All right, and then you see the rest of these are struggling a little bit. This one is just too far away from its 52-week high for me to really mess with. Not clean for my setup. All right, so we do have a smaller list, which allows us to be a little bit more focused. Which is a good thing here. TWLO. Alright, so we've got our oversold watch, CAG, and our 20 EMA cross watch, AYX and TWLO. Those are the ones that we'll be watching for swing trades. And remember, if the market, let's go back to Mr. Spy. If the market breaks over and starts to push, I'll be more aggressive with swings, less aggressive with day trades. Doesn't mean we won't take day trades, but I'm not going to be as aggressive to the long side day trading versus to the short side. So that's what I mean. All right. Any questions before we move to the challenge info? Any of you guys have questions about what our focus is going to be? All right, Mitch, shoot. You have the floor. It depends on the market. It depends on the market. They have the potential to give even more, just like they had the potential to give less. Just depends on the market. So that's why we look at the market, analyze it, kind of stay in tune with it, because that's going to determine how much success we're going to have. Now, obviously, my personal favorite for a long time was the oversold, because I love reversals. Back in the day when they were working really well. So the oversold hook is basically a reversal on the daily chart. And I just I still love those the most. But what's been the best, the strategy that paid the best last year was the 20 EMA crossover. That won the year last year. So 2017, 2016, it was the oversold charts. Last year, it was the 20 EMA cross. So that gives you another element to answer your question. But it depends on the market cycle. No, it's not that I got better at one. It's the market conditions. Yeah, it's just the market conditions. You see, the market was not giving us, even in day trading, we weren't getting real good reversals. So, it was kind of happening on longer term as well. So just take what the market gives us. Now get out there, I shake what my mama gave me. I don't try to add anything else to it. All right, so let's take a look at what we're going to be doing for the Grow Your Dough Challenge 2.0. Again, you guys know how I feel about challenges and contests and stuff like that. This is completely different. We're not setting out to meet any specific goal. It's not like I'm starting out with $1,000 and I'm shooting to make 10 grand by the end of the year. That's not what this is about. This is about introducing you guys and everybody, not just, you guys that are in my community. You've already been introduced to a lot of things. But other people participating in this challenge will be doing different things. Some opened up these investment apps where you can put money in, kind of choose how your money's being allocated. You have that type of control over your money. Some may invest it in a side hustle. But me, I trade the market. So, that's how I'm going to do it. But I really think it's going to be interesting to see. No, Kareem, the watch list is going to be different. That's what we're about to get into right now. The watch list for the challenge is going to be a little bit different. Same strategies, we got to use different stocks. So we're going to get into that in a sec. So this is going to, it's really designed to introduce people who may not have ever been in the market or may have been in. There are other options out there that you can do to take charge and to grow your money. And that's what this is all about. Because, when I told my mom about it, and those people that lived in her era, her generation, it's like, why not just put it in the bank? Okay, what good is that going to do me if I put $1,000 in 20 years? In 20 years, how much money will I have made on that $1,000? And, we're limited to what we can do. We have no control over it other than just giving it to somebody. We don't really have any say-so over it. So, she gave me some money, I guess, a couple of years ago, just when I got started, and she saw I was doing fairly well with it. She gave me $1,000 to invest for her. So that percent that she makes in the first month, she made more than what her savings account made So that made a believer out of her. So it's just a matter of introducing people to it so they could see, this is what can happen when you take control of your financial well-being. That the opportunity is there for you not to sit back and have to sit back and wait and see what other people can do. All right, so what I'm going to share, I already went over what the challenge is. I will put a link to the video that explains everything about it. I will do that for you guys. Excuse me. To Jeff's video, it'll be down there. He's the one that initiated it. He did it a year or so ago. And I think it works great. Honestly, it works great. All right, so this is the oversold hook that we were talking about. And I'm not the only one that trades that strategy. There's all of these strategies that people are touting. It's kind of the same strategy over and over again. It's just repackaged. People make it look different, use different names. But all in all, essentially, it's just the same thing. So, it's easy to use a hook to illustrate what we're looking for. And we saw some examples of this earlier. And if you look at this illustration, look how simple this strategy is. The price sells off real hard, oversold. We're trading on human emotion. The overreaction of humans, people panicking out of stuff. This is how big banks, big funds, it's how they make money. They create an imbalance. People get nervous. They overreact. And we make money. Our job is to be on the right side of those overreactions. Is for us not to overreact and be on the right side of it. Understanding what's happening, what's making stocks move. That's what I've been focusing on in chat for the last several months, trying to get you guys to understand what makes stocks move. Why does my earning strategy work so well after market? I know what I'm looking for. We know what big money is doing. Now, they may change it up this year, so it's going to be our job to figure out how they change it. But basically, these strategies are going to be the same. You just have to tweak them. They're going to make false breakouts, false bounces. You have to be ready to not fall for that and wait and be ready to jump on it. But the oversold hook strategy is caused by bad catalysts like earnings, market panics and overreacts. Look at what happened with Apple. I made some decent money on Apple, with that overreaction. So the price, it falls off a cliff and it lands on a level of support. And that's when we try to catch the bounce back. Some people have likened this to a rubber band stretching out. You stretch a rubber band so far, and then you release all that potential energy, and it snaps back to a level of resistance at that point. But we want to see it retrace at least 50% of the sell-off, at least, or run into, oftentimes it's going to be the 20 EMA that it's going to run into first. And that would be a nice target. But that's the strategy that we're going to be looking for. Now, here's the change that we're going to make versus our normal swing scan. You saw we just went through, and we went through the scan for our main swing account. What we're changing on this is we're looking, instead of looking for mid to high cap stocks, we're looking for mid to low cap stocks. Anything under 10 billion share market share, the price is going to be under 20 bucks. So, for my main swing scan is $20 and over. Here is $20 and under because we only have $1,000 to start with. We can't use margin. It's only a cash account. That's the whole premise behind this. You can't use margin. You can't borrow. You can only use that $1,000 that you allocate to this. So we have to trade stocks under $20. Even stocks $20 is going to limit how many shares I can take. But since we're holding this as swing trading, we're holding it for a couple of days. If I take, a 40 share position and it moves, say, 3 points in the course of a week or two, we've made around 120 bucks. Let's just say we made 100 bucks. Let's just say we make 100 bucks. We just grew our account 10%. Okay, what bank can you put your money in and in 2 weeks make 10%? What savings account does that? So we have to look at this thing in perspective. Not about trying to get rich quick. It's about, number one, learning how to build our wealth. And as we grow, our money grows and we can invest more. So the more money we invest, the more money we make. And so we won't be making these small returns. 5 years from now, we may be killing it. We may have traded our 9-to-5 job away to where now all we do is our full-time job is managing our money. That's what I did. It's exactly what I did. It took me 2.5 years, but I fired my job is essentially what I did and start managing my money. Yes, under 10. Stocks under $20. Here I've got over $3, but I've changed it to under 20. Now, obviously, I'm not going to trade, $1 stocks or stocks under $1. I'm not going to, that's not going to work for me. I still don't want to get into that. But you can see, it's going to be under $20, not over $3. Because over $3 will give me some like AVA that I can't trade. Right here. I can't trade that with $1,000 account right now. So that was changed to under 20. And I'll show you the scans here in a minute. So it still needs to have some volume, but it doesn't have to be trading over 1 million shares because we're swing trading. We're not looking for it to run up that day. We're looking to hold it for, weeks, week, 2 weeks, maybe 3 weeks sometimes. Just depends on what. If it keeps going, we're going to keep holding. In the RSI, we're going to look 20 to 30. We'll start looking at 20 first. If we don't see anything, we'll bump it to 30. And we'll look to see what we're going to have. So I'll show you the scan. I didn't update that picture, but I'll show you the scan. Okay, the 20 EMA, exactly what we look for today. We're going to be doing the exact same thing. Exact same thing. We find a stock that's trending strongly above the 20-day EMA. We kind of wait for the stock to pull back below it. And then we're going to wait a couple of days for the stock to bounce and completely come back above it. The stock That's why we're looking for uptrends, stocks that are in an uptrend. Now, if it's taking longer than 5 days for it to come back, then I'm not going to jump on it. We're not. So in other words, once the stock drops completely below the 20-day, then I'm only going to wait a week for it to bounce back. If it doesn't, not going to happen. No, we're not going to move on it. All right, so this one I update. This one is the right one. Under 20 bucks. I'm looking for stocks where the price has crossed the 20. Now this one has SMA, but it doesn't have a choice for EMA. But I have on the chart, you can put the EMA. So that's what I'm looking at on the chart. They're close enough together where it just doesn't really matter that much. Yeah, well, it doesn't really have to close, Scott. It can dip down below it. Obviously, it would be okay if it closed below it. That's when we're going to wait the 5 days. But it can dip below it and get bought back up. And then the next day, it may, sell and bounce off of that 20 and continue on. Yep, Brian, that's good. Coffee with Ed. I think didn't somebody do that a while back? Who was that? I can't remember who did it. Somebody used to do it on Saturday mornings. Yeah, Martin, we're looking at the daily chart. All daily chart. When we're swing trading, we're only using daily charts. All right, so this is the scan that I'm going to use for that. So as far as getting started, okay, probably the first quarter, these are the strategies that I'm going to be focused on. The oversold, and then looking for the oversold, and then looking for the 20 EMA crosses. These are the two that I'm going to be looking for. Now, when the market's trending up, we may not have the oversold charts. We're not going to find as many, but the ones that we do find will be golden, because these are the ones that have traded against the market. And at that point, when it bounces, you may get a stronger bounce. And when the market's trending up, you're going to find a lot more 20 EMA crosses, because typically what happens when it hits the 52-week high and it has that false break, it pulls back to the 20. And that's where I like to catch them. But as we move through the weeks, you're going to see exactly what I'm looking for. It just takes time. Guys, you got to be patient. It takes time. It's not something you can do in a week, 2 weeks, 3 weeks, a month. It takes time to kind of build up that understanding. If you rush it, you're going to miss key elements, and you're going to end up starting back over again when you really don't want to. All right, so the second, what I'm going to be doing later on, and I really expect to be able to get into this once I get a little bit more money in my account. A couple years ago, I started looking at sector ETFs, and what they are, ETFs, they hold a group of stocks related to one specific sector or industry. And for me, it offered less risk than holding one or two individual stocks, in swing trading. I'll day trade. The only ETFs or ETNs I'll day trade are going to be ones that are associated with a volatility index. Sector ETFs, I do not day trade. I don't even look to day trade them. Some people do. like the gold and um, natural gas and oil, and those ETFs, those sector ETFs. Some people day trade. I just don't do that. I look to swing trader, and this is something that I can bring into this once or if I can get enough money in there. There's no guarantee that I'm gonna make any money whatsoever. I've never traded this strategy with using $1,000 and no margin. You guys saw the struggle we had this summer trying to day trade $1,000 account on margin. It was rough. So, but this should not be any, should not hold in that type of stress, because we're looking to swing trade and hold stocks for longer periods of time. This typically they have less random volatility and better trends. Provides an extra level of diversification, and there are different ETF options for all sectors, not options like an options contract. Maybe that was a bad word to put there, but there are choices available for all sectors. So focusing on the specific ETFs, it provides plenty of opportunity and in a variety of market conditions. There's always a handful of industry sector ETFs that show divergent trends from the market. The market may be going up, these sectors may be going down. Eventually, they're going to have to catch up with the rest of the sectors, and this is where I like to make my money. The sector indexes or indices, often they're going to generate double-digit percentage gains. The market can be trading sideways, but these sector ETFs tend to make, pretty decent moves, regardless of what phase the market is in. If you've gone through my swing trading class, you'll know first thing we talk about is learning what phases the markets are in, so you won't be caught on the wrong side of things. The market can be in phase 4 and the 4th phase, and you may have some sectors that are going up. You may be in phase 2 and you have some sectors that are going down. Those are the ones I'm going to be looking for that I can buy and hold it until it gets back in line with everybody else, and I can make profit that way. Now, this is ETFs, a little bit more complicated. So you want to make sure you go through the class and understand what these are. We're redoing the class again, this year, and we're going to focus a little bit more on ETFs as far as the swing trading. We're going to, that's going to be added in. There's already ETF classes there, but we're going to add a little bit more focus to it. Yeah, Brian, we're going to see how that's going to work. We're definitely going to see how that's going to work. All right, so these are the 10 major sector ETFs. Okay, these are the main. Now, obviously, each sector has multiple ETFs. Like the energy sector, they have multiple ones. Some of them are even, they're cheaper. They're under $10. I would be able to trade them. But I would like to have a little bit more money in my account. Because these, you're not going to find too many $5 ETFs that's going to make really good moves. But these are the major sectors. And what I'm looking for is I'm looking for a ETF. I'm looking for a sector to start trading opposite everybody else. It's going to move away. It's going to start. If everybody's going up, I'm looking for the one that's going down. And then, I can flip it. Now, there are inverse ETFs, but a lot of those are leveraged, and it can go wrong very quickly. So dealing with a smaller amount of money, a smaller account, I try to stay away from leveraged ETFs. I just like, I want to be conservative. That's my MO. That's who I am, so I want to be a little bit more conservative. All right, so what I learned from a presentation a couple years ago when I first started looking at ETFs, it was the principle of reversion to mean. The mean is the average where all of the other the other ETFs are going to be. So the price on one sector is going to deviate from the average, and it's going to deviate for a short period of time, and then it's going to come back and get back to the average. So it's pretty effective, especially long term in these ETFs. So you're going to have some major sectors. They're going to temporarily deviate or fall out of line, but eventually they're going to move back together with the rest. So I'm looking for that one that fell out of line, and that's the one I'm going to jump on. And here's another illustration that they showed where, you have one sector ETF is going to deviate from all the others. It can be leading or lagging, meaning it can take off and go and run ahead of it. But I'm not shorting these. You can't short in a cash account. You can only go long. So if it leads it, I'm not looking for the ones that are above it. I'm looking for the ones that lag behind, because those I'll be able to buy and make profit off of it catching back up with the rest. So with time, it's going to move in line with all the others. That's where our profit's going to come into play. So how do I find these? FinViz has a couple of things that you can use. Now, this does not line up perfectly with the 10 sector ETFs, but it gives me a good idea of what sectors are lagging behind and what sectors are going to push forward. So here, over the last month, we know the market has been going down. So it's obvious that the performance is going to be negative. So which ones lost the most over the last month? You got consumer goods here. Okay, so I come back here and look at over the last week, who has performed the worst. So we've got consumer goods. It's hitting the bottom again. Now it's picked up a little bit on Friday, but look at over the last week, consumer goods, they're not really keeping up with what's going on. So those are that's the ETF sector that I want to look at. Look at healthcare. It's still near the bottom here. This was one of the ones that lost the most over the last month, and it's still growing relatively slow compared to the rest. Now, last week it kind of fell in line with everybody else, but utilities, here we were losing the least amount, but utilities is one of those ETFs that in a bear market or when the market is selling off, these typically don't sell off as much. So this one kind of stays, pretty close to the vest. But this just gives me a good idea of what's happening in terms of this sector. Also, there's a heat map on FinViz as well for ETFs. This is just a 1-day performance. Let me bring it back up so I can show you what this is. It's under groups. It's where this is. Okay, you go to maps and go to ETFs, and let's see what has it done over the last week. What about 1 month? So there was a bunch of red here. The only green that you're going to see potentially are in the volatility index. These are inversed, pretty much an inverse ETF. That's where you're going to see a lot of the green. Or ETFs that trade opposite what the market is doing. This is another way you can kind of analyze sector ETFs. And then see which ETF is in each sector. So I have FinViz. It's a very powerful tool. So I'm gonna be using it for pretty much everything. And like I said, this is gonna come in, I'm thinking, in the second quarter. By then we would have had some serious classes on this. So you're more comfortable and you understand these ETFs a lot more. But just to give you an idea of what I'm looking at, this is what I have up. This isn't on the computer that I'm looking at every day that's streaming to you guys. This is on, my laptop that I do, I have dedicated for a swing account. And this is what I'm looking at. All of the sector ETFs. I've got the 10 sector ETFs up here, and I can easily see, okay, XLP is lagging. XLP is the U.S. consumer staple. XLU is lagging. That's the utility sector. XLRE is lagging. I think this is the the real estate sector. So, right off the bat, I can see which ones are lagging and which ones are going to have to, maybe pick up steam to catch up with everybody. And these are the ones that we could, I could potentially go long. But it's got to have enough profit potential for it to make sense. So what I would do, presumably go to XLRE and look in the the real estate sector, find out if there's some sector ETFs that trade at a lower price that are tradable, and we jump in it. Yeah, Mitch, I know they're not all under $20. The purpose of having these up, as I said, is to give me an idea of which sector is deviating from the rest. And then what you do is you go in, you could use the heat map and find out, what sector is these are the indices. But here's the energy sector. You can go in here and look at, okay, which one, just look at these and say which one of these is going to be cheap enough for me to trade. Okay, I think AMJ is one. Hold on one second. Let me pull that up. I think AMJ is going to be the energy sector one. It's a lower price. Well, 20 bucks. It's a little bit lower. Still not something I could trade with my $1,000 account, but you could see this is an energy sector. This is an exchange traded note. You can go through the class I did on volatility ETF ETNs, and that explains the difference between what an exchange traded note is and an ETF. But these pretty much trade the same, these instruments. So it's just a matter of identifying the sector and then going to and identify an ETF that you can trade. And you may, once you do this, you'll make a list of stocks that you can trade. What stocks that fall within your price range. And you don't look at anything else. It's just like me with TVIX when I'm trading the volatility index. I don't look at anything else. Some of you guys are trading other instruments, but I don't look at anything else. Because I'm comfortable with this, I know what I can do with it, and I'm not going anywhere else. Yep, and see, he found MLPY, which is one. There are ETFs that are cheap enough to where you can trade it, but look at this chart. There's not a whole lot of volume in this. So this would be a little bit scary for me to trade. There's not a whole lot of volume in it. You can see how choppy it is. Now it's actually picked up some steam here in the last week with the market, but this would kind of be scary to me. I'm not sure. I'm not too sure if you have to be an elite member to see this, to see the heat map and all of that. I'm not sure. But if not, there's so many resources on the internet that you could go to find ETFs. These are the 10 sector ETFs. The 10 major sector ETFs. And these are the ones that, in the presentation that I watched several years ago, these were the 10 major ones that they shared with us. And this is what I've had up ever since. Yeah, Thinkorswim. Now, Thinkorswim, that's the one platform I'm going to use. Like I said, I just deposited $1,000 into it. It's the same account that I've showed you guys. I've had $3 in. The only reason I had it was for charting and using the on-demand feature when I was, started out. So that one I put $1,000 in. That's what I'm going to be using. Thinkorswim is a very, very powerful platform, especially for swing trading. Any and everything you ever want for a swing trader is going to be on that platform. But it takes, it's gonna take time. This, like I said, the ETF deal is a little bit more complicated, a little bit more moving parts than that you're gonna have to learn and understand versus the first two strategies I shared with you. And the first two strategies are what I'm gonna be focusing on. All right, so that's what we're going to be doing. Like I said, I have no idea how well this works with not being able to use margin. But the key is understanding that this is not something that you're going to look to double and triple your investment in 3 months. That's not the point of this. What we're doing is learning. Number one, you're starting with a small amount, so you're learning. A lot of people are new. You're just learning how the market works, how the market moves, how to trade these movements in the market. So, and as you get better, you grow your account, you get better. Eventually, you'll have more money that you'll want to put in. You're growing this, plus you want to add a little bit more. And you have a strategy, you have a system that works, you're profitable. And like I say, over time, you can fire your job if that's what you want to do. Some people really love what they're doing and they don't want to quit their job. They just want to build, wealth. Get out of debt. That's what all this is all about. No specific set holding times. It's just you will be trading the setup. As long as the chart says it's good, we'll still be trading it. This is not something to watch every day, all day long. You get in it, you set it, and you forget about it. You come back and look at it at the end of the day to see where you are. Do you need to change position something differently? If not, you're done. We come back tomorrow, the next morning. You look at it, make sure you don't need to position anything. You want to put your stop in. If you're close to a profit target, you want to put that in and let it go. Yeah, that's how we do our swing trades. That's how I've been swing trading for years. It's nothing different. The only difference is, oh yeah, I've done some. I haven't done a whole lot, but I have done some. I mean, everything have been doing has been doing well, so I haven't really changed much. But the ETFs, there's something that you can add when the market gets stagnant. And that's what I want to do. Like this summer, when the market gets stagnant this summer, then I'll be looking heavily at ETFs. Because this summer, when the market was stagnant, ETFs were good in terms of swing trades. So that's what we're going to look at. Kareem, I will be, anytime I make a move, for my daily, when I do my daily recaps, I'll, add it to that. The members get, will get the emails and stuff. But the general public could keep up, because I will do, add it to my recaps at the end of the day. Oh yeah, some jobs are just beautiful. There's some people I know, they work from home. They're not gonna quit their jobs, but they're just making all this money. So when they do retire, hey, they don't have to worry in the world. For me, I just wanted to work for me. I just wanted to work for me. And that's what it's about. All right, guys. So that's what I wanted to share with you. Kind of give you an idea of what I'm going to be looking at. And we'll be talking more about it going forward, as we progress. But like I said, this is new. This is new. And I don't know how I'm going to react. Just making a couple of dollars on a winning trade. It's going to be difficult, going from, making good money to making small amounts. But the key is, you got to be able to accept that and not rush and jump in front of yourself and try to force things to happen very quickly. You can't do that. It's going to take time. And so I think it'll be easier for me just to put the money in, let it go. And I've got other things I'm focusing on. So I'm not tunnel visioned on this one thing. And so that's great. I think that's going to be great. All right. No, I mean, if you're a day trader and that's all you want to do, you may not want to get into swing trading. But I'm going to tell you, all successful day traders do have either long-term investments or, they do longer-term swings. They have diversified. They're not living just off their day trading profits. They put money in IRA accounts that they may be trading, that they have longer term investments in. So once you start making money day trading and you're able to put some up, yeah, you're going to want to diversify. You don't want to have all of your eggs in one basket. Sure. No, CAG is not too late. Because take a look at this. All right, see, here is, I'm just going to put this line in here. It's got to hold over this. See, here's a high. It put in this high right here while it was trading sideways. We're starting to make higher lows here. Friday, we just made a higher high, but we did not establish over this level. If we open above this on Monday and the market is strong, good chance of making it happen. Good chance of making it happen. Yeah, but it's got to get over this. If it can get over this, say 22, then I wouldn't be interested in it. No, we didn't miss the best entry because look at what it did. It did not establish over this high. It sold right back off. So even if you entered Friday, you're kind of right back to where you started. The entry points are if it opens higher than the previous day's close, that triggers an entry. It's just as simple as that. Kareem, if the market's selling off, then yeah, you won't be trading long. That's when I sit on my hands on my swing trades. That's why I say my swing trades, I get less aggressive in. Day trades, I get more aggressive. AER, let me see. Yeah, that one did pretty good. Yep, I think some of y'all caught that one last week. But that one did pretty good. And it's still going. So it's still got a couple more points it can get to up to the 20. On the spot, as I said, I'm looking at it to see what it does here. If we establish over the 20 and the 90, then yeah, I'm looking at it. It has enough room to run to 260, and as it's going up, there's room opportunity to swing trade to the long side. Yeah, exactly. What do you mean by dot this account? I'm not up on that lingo. All that depends on share size. That's going to determine how much share size you can take. If I get in this, let's say I get in around 89 and the low of the day, let's see, the low here was what? Let's see, 83. The low here was 83.20. So obviously your stop can't be the lower day here. So all you can do is enact a max loss stop. How much are you willing to lose if you're going to give this a chance? Is it going to be based off of the moving average here? Is it going to be a max dollar loss? I'm willing to risk, $500 in order to make $2,500. So you go in with a $500 loss. built in. Just depends on how you want to manage your risk. So if I go in, let's say I go in with 300 shares on this, I get in at 89. All right, where's my target? My potential target is up here at 100, right? So that's 11 points. So if I risk 5 points to make 11, that makes sense. That's over 2 to 1. But if I'm in my, regular swing account, that's acceptable to me. I don't risk $1,500 to make 3,300. Or potentially more. Or if you're not okay with that type of risk, then you go in with smaller size, or you tighten up your stop. Oh, double this account? I mean, it's possible. It is possible. You hit 1 or 2 good trades. Definitely possible. Because see, the more money you make, the more money you're able to invest. So you'll start growing slow, but as your account balance grows, that gives you the ability to grow, to invest more and make more money. But we can't look at it in terms of dollar amount. We need to look at it in terms of percentage growth, because that gives us the real picture. That if let's say we grow 24% by the end of the year, just think about if we had a $10,000 account. We grew 24%. And then the next year we have a $15,000 account and we grow 24%. Trading the stocks that I trade, you can pretty much scale. I don't think you'll ever trade with enough money to where you can't scale. You can buy 1,000 shares of Apple and you will have no trouble getting out of it whatsoever. Oh yeah. The same strategy. It's gonna move. Yeah, trading with a small account, it's one buy and one sell. You're not gonna be scaling out with that smaller size. Because I'm not comfortable trading big size. The largest size that you'll ever see me trade is 1,000 shares. And over the last 2 years, I think you've seen that. I am not comfortable trading large size. So that's why I don't trade lower price stocks that you have to size up on, I'm not comfortable doing it. Yeah, the YouTube videos are free. The member videos, the classes and stuff, that's just for um yeah, that's just for the subscribers. Like the classes and all of that. But the videos I do on YouTube, they're all free. Yeah, I'm streaming this live on YouTube right now. Yeah, this morning I streamed it on YouTube. You know, I don't stream it every Sunday. No, I don't stream. Every Sunday is just right in here for you guys. I just streamed it live this morning because um of the challenge, just to let everybody know what I'm going to be doing. But our Sunday sessions are still going to be right here in chat. I'm not sure why FinViz doesn't do it. I think they reset it like 9 o'clock, and they're not really a real time scan. That's why I only use them for swing trades. You know, are looking for earnings. Other than that, I don't use them for day trading at all. My biggest win, whew, well, in terms of day trading or swing trading, because day trading, I think the most that I've made on a day trade is like $3,800. 38 something. Swing trading, it's been over 20 grand. But day trading has been, you know, like I said, I don't trade with large size, so I'm not going to have big winners. That's just not me. That's not my MO. Yeah, in one trade, it was I was caught in a halt, and it gapped down pretty significantly, so I was able to make a ton of money on it. The swing trade, it was just one that just grew. We had some good news come out and just took off. But I haven't been that fortunate on day trades. But then again, like I said, I don't trade big size. I recommend for scanning, day trade scanning, I recommend Trade Ideas. I mean, that's who I use. I'm not an affiliate or a partner with them at all. I don't affiliate or partner with anybody. You know, everybody in this industry has a conflict of interest in terms of their business model. So I just don't affiliate. I'm not an affiliate or anything with anybody. Yes, Mitch, I am. Well, thanks. I try to be as straightforward and open as possible. I mean, that's all we can do to, try to help everybody and make sure that they know exactly what's happening. And some people don't like it. It rubs some people the wrong way, but that's fine. When am I going to offer swag to buy? What is that? I'm not up on that lingo. Options is something that I know is further down the road for me. It's something that I probably will get into at some point. But right now, I just haven't, there hasn't been any opening for that to happen. It's just like with ETFs. The possibility there is great, but I'm doing well with stocks, so why not? Merchandise. Well, if you go on the website, you'll see there's a couple things up there. They'll be up there through my anniversary. I usually run them through February, and then it'll come back on around November again. Well, I might do something different for the anniversary coming up here in a couple of weeks. But I'll see what I'm able to do. I'm not good at designing anything. This was just something that people were asking me for, and I just put it out there. Well, if you compare us, if you look at us compared to the big guys, we're all just average Joes. We're all just average Joes. Well, I actually started Average Joe Trading back in 2015, but I opened the community in January of 2016. So we're all average Joes, just like everybody else. So that's, but we don't have to think average. We don't have to execute average. Most of us weren't born with silver spoons in our mouths and dads giving us millions of dollars to get started in business. Most of us, we have to make it on our own. I opened it January 21st, 2016. That was the day after Warrior Trading kicked me in my ass. So that's when it started. Execution is, what does ET say? Execution is worshipped. That's the key to making money in this market, is executing. If you can't execute, you can't make money. It's executing your trade plan. Okay, the easy part in trading is learning strategies. Anybody can learn strategies and identify patterns and everything on a dead chart. But executing when the chart's live and things are moving, that's different. And for me, my it's the second. The second. In terms of it's the second in terms of the community. But I started Average Joe Trading in 2015 because I started doing mentoring and stuff like that. So I had to start that. I started my blog and mentoring and all of that. So Average Joe Trading started in January of 2015, but the education community started in January of 2016. My video is still up there because I'm still the only one that actually verified anything they did. I mean, I don't know anybody else that has done what I've done. So I guess it's going to still be there. It's going to still be there. I mean, if you go back in my blog, I didn't delete any of that stuff from the time I was there. It's no secret. I'm not going to try to hide it. Just go to my website and you'll see where it says the most popular blogs. Just click on any one of them and it'll take you to the blog. That's one thing I want to start doing in 2018 is actually writing more blogs. Like everything that I talk about on the Rolling with Ed, just turn that into a blog and post it every week. That's one of the tasks I have down that I assigned for myself this year. To make sure you guys get that. Yes, sir. Yeah, you gotta. And I still think that is the key to my success is not having a whole lot of strategies to run and chase. I'm not changing up. I'm not adding anything to what I'm doing. I'm just adapting to the market, adapting my strategies to the market. That's all I want to do. And like I said, you do want to diversify and not put all of your eggs in one basket, which is why I moved into swing trading and all of that. But you know. Yeah, still get that virtual classroom thing is pretty much complete. I got to get some software stuff worked out. But yeah, that's when we do the classes, that's where the classes are going to be. I'll be recording them, but it'll be um, a whole different feel to the classes. Oh, I was downloading them into Profitly because Profitly, yeah, where you could they would verify your trades, but you had to download it directly from your broker for them to be verified. So that's what I was doing. Yeah, that's still on. I think it's still on Profitly. I'm not sure. The deal was, when I very first started, back in the day, just like everybody else, I started with Tim Sykes. I joined that community, and as part of that, we got um, access to Profitly. So even though I only stayed there like 3 months, I still had access to Profitly. The basic Profitly thing, where I didn't have to pay for it. So it was just easy to continue to download my stuff to Profitly, or upload to Profitly, whatever the right terminology is. But it's got everything. Excuse me. And then, I they told me I had to stop using it because it was on their competitor. It was part of their competitor's website or whatever. So they wanted me to stop using it. Oh man, I came close to borrowing the money to do the 5,500. It was $5,500 they were charging, and then they knocked it down to 4,500. And I'm like, look, why? The whole point is for me not to go in debt. So I was not gonna do it. The whole point was for me to try to get out of debt. All right, guys, the password hasn't changed yet on the videos. So don't worry about it. As long as your old one keeps working, don't change it. I'm in the process of doing something with the video, so I haven't changed anything yet. However, with the new video that's gonna come out Wednesday, it will have a different password. and I will share that with you guys. But the older videos still will have the same password for right now. All right, guys. So we don't have any more questions. I'm going to sign off here. But thank you guys that came and checked us out on YouTube. So I will be, adding any moves I make with this challenge. I will be adding to my, adding it to my daily recaps, so you can keep up with it there. And anybody that gets interested, if you want to look at taking the classes that I have that teaches all of these strategies, the classes are free. If you're a member, you get access to everything. So you'll never have to buy anything else other than one-on-one mentoring time if that's what you want. But other than that, you'll never be upsold on anything. All members get equal access to everything. So you guys have a great rest of the day. Enjoy the rest of your weekend. And I'll see you guys soon.